Week in crypto of January 2026. What an opening month it's been for crypto with quite a bit of ups and downs. Obviously, a lot more downs here over the last week or two, but here we are with Bitcoin back down at about 83K. Actually, just went below right before this stream started. But I'm here with our CEO and founder at Santiment, Maxim, and we will be going over plenty of important metrics. What we do is look at some of our data-backed infographics and charts and various signals to give you the best idea of what the data is showing right now. We're not going to give direct investment advice if this is your first time watching, but enjoy the show and you'll likely learn quite a bit about how our signals work and what's going on with the markets in terms of the narratives going around, the on-chain fluctuations, and the social trends that have shaped the past week. Brother Maxim, how are you, my friend?
Good. I was glad and surprised to hear you so positive. With ups and downs, I think now in everyone's mind. Well, as a matter of fact, we will have to look into on-chain or relevant on-chain and social metrics to see what is in the people's mind. As we're all eager to know. Okay, is it like temporarily a rebound rebound for US dollar and crash for markets? Or is it the new wave of suffering? Now, first, crypto suffered because stocks pumped and people moved from crypto to stocks. Then we suffered because people learned from crypto to gold and silver. And now we will keep suffering because people go from crypto to USD. I don't know. So we'll have to look into details.
Yeah, please go ahead. Yeah.
No, it was eventful for the last few days. Yeah.
Yeah.
And to reminder, you did a good reminder. It's not an investment advice. It's for us to walk around with whoever joins the stream, our platform, which is by definition, if you try to combine something into meaningful intelligence, it is difficult. So platform might be, if you see it first time, a bit more complex. So for us, it's a way to explain or show how we use it, not to give financial advice. It might come out eventually and naturally during our stream. Sometimes we talk, we discuss, oh, seems to be clarity here. So, but still, it's not an investment advice. It's a sharing and going through data the way we like to go through it. And also sharing of few things we believe it's important at any given specific time, not only data. Right now, all the weeks, I think I think I keep repeating that it's timing is the most difficult. Yeah, timing is the most difficult. And the majority, like the crowd, never write with timing. And we, as a personal participants, investors or traders, okay, traders, if you use algorithm, you kind of address it some way with specific setup, how you do it. But if we do decisions based on our analysis, we look into something, we hear, and we make a decision. Okay, this is how market seems to be the moment. Don't push yourself to timings that it should happen now or tomorrow. It may happen like a bit more, no need to be so tensed. And I've been expecting 2,600 in Ethereum for weeks. Now we've been very close to it.
Yeah.
Almost there. And I felt, also uneasy because it was like 3,200 and again pumped. But we keep analyzing. And this is second point, timing, be a bit more relaxed. And once the analysis formed in your head, is there is strongly contradicting data points which says, okay, now it has to go up. We haven't seen, I think we saw one last week. It's, I think, retail on Bitcoin started to decline their holdings, but the others were not, and there was another one, I think MBRV was quite negative.
Yep.
But
Still
other
is.
things which we think ideally, and ideally I mean that if I see all of them aligned, which doesn't happen so often, say, okay, it will come naturally to our stream. Looks now, specific direction is clear. There were a few more metrics which we did not see yet emerging. I wonder if it will emerge now after quite strong decline. Yeah, that was the story. And yeah, I don't know where you, Brian, want to say to start. I would split it into two, social and on-chain part. Yeah, because there are few data points we have to check there. So, Brother Brian, where do you want to start this?
Yeah, so there are a few things. For starters, when I say the January month was up and down, it's hard to remember, but the first week of January was actually extremely optimistic and bullish.
Not bad.
We saw Bitcoin nearly hit 96,000, and all of a sudden we're back here at 83,000. So, we kind of had a dual half, or first half and second half of crypto this month, where it looked like a fresh start after a gloomy, bearish performance to crypto to end 2025. We got a surge of optimism, and all of a sudden that optimism dooms us all, right? We've talked many times about how markets move the opposite direction of the crowd's expectations. Well, the crowd came into 2026 watching markets go up, got a little too much FOMO, and paid the price. And we will look at a few charts that show objectively how those bags of the retail traders were fluctuating at that time, and how whales have fluctuated, because they were moving up a little to justify the rise before they changed their mind too. And just in the past week, which we'll try to spend most of our focus on, you see the massive market cap dip. And as Maxim, you alluded to, a lot of this was due to kind of a cannibalization effect from gold and silver. Equities had their time kind of more in the middle of the month before gold and silver really started to take hold. And there was a big narrative about how, cryptocurrency traders should and were flocking to gold and silver as that alternative place to actually make some profits, because crypto, since its all-time high on October 6th, has dropped, I think, around 25-30% when referring to Bitcoin, and a lot more than that when referring to most altcoins. The other thing to note before I get off the screener here is trading volume almost doubled this week compared to last week. Or I'm sorry, it's up 85% in the past 7 days. Compared to a week ago. I said it correctly. And that's, to me, one of the most telling signs of the week, because traders finally started to pay attention. I think in the last couple of weeks, it got kind of mundane and traders were a little complicit, and it was all about Ethereum staking and where to make passive revenue. Now we're finally getting enough volatility where the bulls and the bears are coming out of the woodwork and making those trades that they've been waiting to make. That's my interpretation of such a large volume spike, and a 14.5% market cap drop was the catalyst to it. And when we look at the trending stories, I'll hit number one here in just a moment, but here's number two. We've seen this all week long. It's all about gold and silver. And it was very positive for most of the last couple of weeks, as you would expect, with gold and silver making new all-time highs, especially silver. But markets saw a massive sell-off as gold and silver erased over $6 trillion in market cap within hours. And yes, today, at the time of this recording, we're seeing even more blood in the precious metal streets, with especially silver down like another 14%, spot silver just today. Gold is down something like 4 or 5%. And this has been the big story. Just, everyone was expecting the profits of gold and silver to eventually make their way over to crypto and be the savior. That hasn't really happened, at least
let's say
not
majority,
yet.
not everyone. We
course.
were making more like jokes about it. If you can call it jokes, but yeah. Majority, at least, I don't know if they really expected, but this was a hopium or belief.
Yes.
And it's one of actually, Brian, we might even check in our social tool. I don't know how would you form a query, gold
Just the overall
or
mentions.
silver, and then you combine it with what?
Well, I made this earlier in the week actually
Yeah.
and put it up on
Uh-huh.
our socials. So
Okay.
this is the overall, let me get shared access on. I'll just do it by day. So this is the overall mentions of Bitcoin versus silver versus gold. If we can get gold to load here. Oh, I know why. It's because you see these assets automatically turn on up here. Give it just a moment. There we go. So here's the daily mentions going back to late October, 3 months ago, of Bitcoin in blue, silver in red, and gold in gold. You can see the moments where Bitcoin was dominating, and this is with shared access on. So all of them are on an equal level here.
Okay.
Bitcoin way above silver and gold. All of a sudden, gold really starts to be
Yeah.
a pull away candidate because it's doing so well in mid-December. And then at the turn of the year, we have some moments where Bitcoin's going up. You can see the faint green line here. It
Yeah.
gets all the way up to 96 almost. And then gold takes over as the narrative in mid-January. And silver has its big top, or not top, but social volume top in like late January here. So now silver and gold are still very high. Bitcoin has kind of fallen back down and taken a back seat. And I think it's very telling, how these patterns kind of shape crypto's future, where gold, when it really pops up, Bitcoin traders were getting kind of optimistic about, gold not being, at least not hindering Bitcoin. But this spike, especially coinciding with Bitcoin's top, I think people are starting to learn, gold and silver aren't exactly the best friend of Bitcoin that's coming to save it every time they spike. And I'm curious what you would make out of this chart yourself, Maxim.
I thought it would be possible to have a chart, but I don't know how to form a query to our social data collection where people specifically discuss gold and silver first and crypto next, because that's been a kind of like a narrative. I met it also a few times. Yeah, so it's in the proxy what you had in the query. But it's a separate word. So what if we say Bitcoin, gold or silver in brackets, and then and Bitcoin or BTC or crypto? Yeah.
So just all the narrative all together, basically.
Yeah, but yeah, exactly. Yeah.
Parentheses.
Bitcoin or BTC or crypto. Yeah. Yes. So this will be probably. Let's see what we. Well, okay.
Yeah,
not
it's
bad.
so the conversation is really starting to pick up, and really all we've needed here is volatility. And now that we finally have it,
Take now we look into last 6 months. Let's take 1 year. Because I would believe that 1 year ago no one really talked about much. Yeah,
yeah.
kind of. Yeah. So you can see obviously it's a relatively new narrative. Last time there was a strong spike, but it's maybe in October. I don't know what was exactly in October. Why there was a first strong spike? Can you?
Well, this was
now
the
show-
all-time just after the all-time high.
Yes,
So I think a lot of people were buying the dip.
But it coincides kind of with the bottom. Social dominance. How dominant is this conversations? These conversations are.
It's loading. Pretty similar. Big spike
Okay,
here.
so around 1%. It's okay. It's sizable.
Yep.
But we did very rough and simple query. I mean, if we would start extending it, we would get more volume and more dominance. Now, if you scroll down just to make sure that it's to see on which channels. Okay, the latest one on Telegram. Okay, but otherwise,
I was going to say, the other Maxim and I were talking yesterday, and Telegram is getting a lot of spam and noise right now that's skewing stuff a little bit. So you do need to keep that in mind.
Yeah. But I see that Reddit and Twitter have similar patterns. So in
Right,
this
very
case, that's
similar.
why I wanted to check. Is it and everywhere? Like 4chan, Bitcoin Talk, even Farcaster.
There's some anomalies with just Telegram right now for like everything. It's very strange.
So I would say, based on this chart alone, the last time we saw similar spike on Reddit, selected Reddit channels were tracking, and curated list of Twitter profiles were checking on October 10th or 11th. Similar spike. Even you see the volume is similar. They kind of form. It wasn't final bottom at that time; was temporary bottom. So it's interesting data point. Yeah, it's interesting data point.
Yeah, I think you know the thing I noticed with this query is the conversations around Bitcoin, silver, and gold tend to
In one,
fade
it should be in one
as
sentence. Yeah, it should be one sentence. All of these words. The way our tool works. So when you enter such a query, it means all documents, all conversations, all messages we are collecting, and it's, I don't know, hundreds of thousands per day. There should be gold or silver and one of the definition of crypto in one sentence, or let's
Right.
say in one piece of text. So
right. But when gold and silver is being mentioned alongside crypto or Bitcoin, it's actually the conversation moves up a lot more when prices start to move down. When all is good and we're
Yeah.
on this rally
Yeah.
like we were the second half of last year, the conversation really starts to drop. And gold and silver were doing very well right here. They actually outpaced Bitcoin by a large margin last year. But when Bitcoin was going up, no one cared about gold and silver. But now that crypto traders are looking elsewhere to try to find profits, it's being mentioned a lot more because Bitcoin itself is struggling and it goes up, not perfectly. There were times where it was going up while Bitcoin briefly went up at the beginning of this year, but it really surged when this retrace started and everyone's like, hey, what about gold and silver? Is the real gold replacing digital gold as the best investment now? We have these conversations all over social media now.
you know what? Now when you say this, and I was thinking in parallel, in a similar direction, I wonder, and I think we could ask our data scientists to take this last week of data, where gold, silver, crypto, Bitcoin, or BTC, in this combination, and run our trending story. So what will be, is it only one narrative that money should flow from metals to crypto, or there are several narratives? It will be, if it is only one, then it probably means crowd, as you know, timing is never right. So
Right.
probably recovery, one more crash. But anyway, there are a few options how this might work out. Would be interesting to look into what are the stories behind. And this is, in my opinion and experience, one of the best ways how you can use AI. You give it thousands of text documents, some specific prompt, and then it gives you summaries or
Yeah, and
categorization.
at least on our trending stories, today
Yeah.
we have in the number 2 spot, market saw a massive sell-off, gold and silver raised $6 trillion in market cap. Yesterday, the leading trending
Was the first
story,
one, yeah.
precious metals like gold and silver are experiencing historic rallies, hitting all-time highs amid a weakening dollar. So you can see how much, obviously this is true yesterday and this was true today, but there's massive volatility in both directions. But you can see how much people are latching on to every sensationalized story as gold and silver are at these historic levels still, and how much that is shaping the narrative despite our AI data pulling from crypto sources specifically. So these are crypto people talking about gold and silver. I think that's worth noting. So yeah, I mean, as of today, the only story that's more impactful for the crypto community is the fact that Trump's nominated a new Fed chair to replace Jerome Powell. And according to what we know about Kevin Warsh, he's known for his hawkish stance, but has publicly supported Bitcoin, calling it the new gold for those under 40. This nomination signals a potential shift in Fed policy and has sparked strong reactions. So the pro-Bitcoin comments are interesting. Obviously, at least here in the US, most people are wondering how he's actually going to affect, interest rates and the stock markets. And as a result, because crypto and stocks are so correlated still, people are going to obviously question how that's going to affect crypto. But if we just look at the correlation here, obviously the S&P and gold have outpaced Bitcoin quite a bit over the last year. But going back to most of last year, there's still a pretty big correlation. So Kevin Warsh coming in, having a hawkish stance, potentially doing more of what Trump is hoping for with interest rates, this can change things quite a bit in terms of the S&P 500 being able to continue to climb despite, since, that bottom last April, it's already up 36%, 37%. And the S&P 500 historically over the last 100 plus years goes up about 8% per year. So going up 36% since April of last year, 9 months ago, that's significantly outpacing the average. And many people are already kind of assuming we're in a bit of a bubble, whether it's due to AI hype or tech hype or just general regressions to the mean. Having someone come in and bring interest rates down even further could potentially give a little extra steam to an already pretty historic rally over the last 9 months. So I'm keeping an eye on that. I want to shift our focus for a minute, Balance, to our micro versus retail traders here. Let's go back 6 months. And this is one of the more concerning signs for me. So we talked a little bit in the middle of the month how
the wrong guys are buying. Okay. Guys.
Exactly. It's pretty inverse where 10 to 10K wallets, those sharks and whales are moving down again, while retail is trying to buy all of these dips once again. And that's the exact opposite of what we were seeing in the middle of the month when we were really starting to gain some traction. Ideally, we obviously want green line move up, red line move down. And right now, it appears that retail's forming enough of a narrative that this dip is temporary, where they're buying with confidence again. And generally, based on data, this is the wrong pattern and will lead to retraces. Not a guarantee, but you can see what happened, from early October to early November here, when we had a similar pattern of red line retail going up and the green line moving down. So I'm watching this closely. I spoke with Maxim T yesterday, Balance, and he pointed out how the 100 to 1K specifically has quite a bit of correlation. And this is showing that they've been dumping pretty much since January 7th, almost, or a little over 3 weeks ago. So this line seems to be one of the main reasons the green line is moving down so much. And I'd pay particular focus to this when you break down those different tiers. So, this is only one of many metrics, but I've seen pretty strong correlation with price based on where the green line alone tends to go. But especially when the red line is moving the opposite, it really adds confidence to that signal. And it should be no surprise over the last 10-ish days or so that we've retraced the way we have, with retail buying dips right now with confidence and smart money selling off. I also wanted to point out just a brief talk about Ethereum. Because of all the staking and the complacent feeling from traders for the number 2 asset, you're seeing the amount of 100 to 100K wallets just fall off a cliff due to all of the small wallets gaining a lot more of the entire supply for staking purposes. So it doesn't mean that smart money is selling off. It means that large wallets are consolidating into small ones and basically putting them away for staking purposes, not planning to trade them or actively transfer from wallet to wallet the way we were seeing, in the middle part of last year.
If you take last year,
Mm-hmm.
or let's say 1 year, I wonder when we were building the kind of previous bottom, how was it?
Yeah, it all started pretty much about a month after the tariff announcements, and we really hit that bottom. Bitcoin went up quicker, and then Ethereum followed suit and had a really big rally after a lot of people were writing it off. I remember our calls a year ago where we were saying, or 6, 7 months ago, where we were saying Ethereum is really starting to get a lot of FUD. We wouldn't be surprised by a big breakout. And that happened like a week after we started talking about it. And then they finally had that pivot right at the Bitcoin all-time high. Ethereum had already started retracing, but for whatever reason, 2 days before the Bitcoin all-time high, Ethereum's shift in smart money started moving way back down. So that's what I'm seeing here. Do you see anything else worth mentioning?
Well, it's more, could be not exactly for the bottom, but if we see a strong move up, we can revisit it. Last time when it was actually seems like almost every time when we have Ethereum price increase, amount of wallets in this bracket increases. Yeah. Okay.
Yeah.
So I'm not sure how to make a big sense out of it, but it's an interesting to see such a strong decline. Yeah.
Yeah, it doesn't quite provide the alpha the way the Bitcoin chart does, but it's more just a representation of all the staking going on in my mind. Let's also look at the overall on-chain metrics for Bitcoin right now, because there's definitely some interesting stuff going on. We can see the transaction volume of Bitcoin continuing to decline, right? So from a long-term perspective, we always want to see more and more utility for a specific coin, and Bitcoin is kind of drying up at the moment, whether it's due to fears of making the wrong move right now from traders or just a general lack of use case at the moment. It does appear that transaction volume is moving down. And then the other utility metrics, if I take off the trend lines, make it a little less busy, you can see daily active addresses are moving way down. Circulation is moving down, and network growth also down. So the network overall does seem to be struggling to sustain the same levels that we were seeing in the middle part of last year right now. And if we're hoping that a big wave of mass adoption and uses are going to bring Bitcoin back up, it doesn't look like that's going to be the case right now. Usually this is a bit lagging, to be fair. So like whales will make some big accumulation. We'll see a 10% upswing, and then all of a sudden retail starts to transfer it a lot more. But for now, there's not really any catalyst. And as you mentioned, the MVRV is worth taking a quick look at. 30-day MVRV, we see traders down a little over 2% on average. And then the 365-day, they're down a little over 11%. So both of these indicate that we are in a less risky point than the historical average. If you want to buy,
compared to other hodlers, you will be in a better
exactly,
position.
exactly. So you want to avoid being in when other traders are above the 0% line, and you can feel more confident if they're both below the 0%.
Yeah.
Now they're not in serious buy zone territory. We could continue to fall and see something pretty extreme like we saw back here during the November crash. But even right now, this is pointing to the probability of at least a short-term rebound being higher than average. So that's one of the bullish arguments going on right now.
True.
From a funding rate perspective, I don't see much. It looks like, especially after all the liquidations that occurred yesterday, people are not taking too many crazy risks, kind of an equal. If we just look at BitMEX, we did have a lot of shorting going on, interestingly, yesterday. And then we saw that short-term bounce and the shorting went away. And then if we look at Binance, not anything too extreme. Whale transactions staying quite low. We did see this little spike here from 1 million or more dollar transactions, but that was short-lived. Nothing too special on the ratio of daily on-chain transaction volume and profit to loss. We looked at age consumed briefly when I caught up with the other Maxim yesterday, and it looks like there's nothing that's really showing a sign of dormant wallets suddenly waking up and moving coins back into circulation. Even this big spike here that happened during the crash, from our analysis, it looked like it was just Coinbase shuffling wallets and was not as significant as we were hoping here. So even this big dip was not really a sign of a potential bullish breakout. Yes, we did see a rebound, but that was more so just due to the big crash that had happened already. And that rebound was pretty short-lived. So dormant wallets are a bit of a concern right now, just like we see with on transaction volume and active addresses and network growth shrinking. It looks like the network overall is getting a bit stagnant right now. And then realized profit loss, I'll zoom in a little bit. Yeah, the last real profit spikes occurred here about a week ago, and it's been very, very quiet ever since.
That's probably the most, I checked it today as well. It's a very surprising sign. For others who see it first time or not so frequently, there are times we look at it very often. As for me, it's one of the indicators showing top formations. What is it showing? This indicator, network realized profit loss, when it should be either big transaction volume or all the coins moving on the price which is different from where we are now. So, and on the top it says one narrative, why you pay attention to it. And now after going down, there are still plenty of long-term hodlers who are in profits. And seeing lack of activity moving their coins means they're not concerned. Or they don't see immediate danger. So regardless of short-term moves, that does not look good, yeah? Typically, at the really, if you take, what is the time frame here?
This is the past, it looks like about a month and a half.
Okay,
so I just cut out a really big spike.
If you take 1 year, it will be more, yeah. So major, like in November, yeah, in November, exactly, yeah. So it's when the major bottom hits, there are strong moves. And actually, if you take November, how many months ago? It's like 3 months. Yeah, take maybe the last 3 months. I think we will cover it. No, last 3 months.
Yep. So I'll just go
from here. Yeah, from here is okay.
Yeah.
So it will be more visible that first coin moved which were at a loss. So the coins which were bought more expensive have been moved. And then this very strong spikes. I think there was a reshuffling for this. Coins which were in strong profit have been moved. That shows a reaction. Yeah, so some nerve was hit. And look at where we are now, like nothing. So either it will happen today, over weekend, or Monday, but for sustainable, and that bottom sustained for a long time. I mean, for 3 months almost. We even recovered quite nicely. Of course, never one indicator can show the whole picture, but this is an important one. And we want to see some live activity there. We can see age consumed. Maybe there are some movements there because it's indicated built on top of age consumed. Yeah.
So we had the big spike during the crash. I'll just zoom into like the beginning of December.
So really nothing happens. Yeah.
Make this a different color.
So you know what? It does look like there is strong belief shown through the lens in this particular case on-chain data. Pumping precious metal will flow into crypto. That's why they don't move. Say, what should I do now? I wait. We'll see how it plays out.
Yeah, you know, on that theory,
Yeah.
I don't think it's very realistic. Yes, sure, there are people who own gold and silver as well as crypto and want to move profits from one to the next. Some of them are very wealthy and have enough capital to turn things around for crypto if they want to, especially if they do it collectively. But I think people are kind of looking at the gold and silver profits like they're meme coin or altcoin profits, or like Bitcoin moving into an altcoin. Like it's not the same because it's not adjacent. Gold and silver has been around a lot longer than crypto, and a
Yeah.
lot of people who own gold and silver, if they do want to take profits and it's physical gold and silver, that's not an easy thing to do. You have to actually go
No, no,
to
no. I
a
mean, no. I mean, the belief in on-chain metric shows those who hold in Bitcoin, they believe the liquidity, once they realize profit in gold and silver, will flow to Bitcoin. There is a proof to it. It's not only talks. The behavior, on-chain behavior, supports this case. There are a substantial amount of people who say, "I don't move my Bitcoin. I'm waiting for this liquidity,
right.
realized profits from will flow into crypto, because crypto is indeed supported, more and more regulated, or not only regulated, like legalized and everything, all true fundamental. And we see that people holding Bitcoin do believe in it. That once metal crashed, money will flow to crypto again. Okay, we'll see.
Yeah, I think that's fair. And that makes me wonder about the actual overall amount of coin or amount of wallets, especially smart money. So, if we see 10 to 100 wallets, they're moving down. 100 to
Yeah.
1,000, they're starting to move down over the last 10 days. 1,000 to 10,000 is moving up. But if you just look at this key stakeholder tier,
Yeah.
and we'll hide the others, it's been moving down for a while. Yeah, 577 less wallets than we saw from the beginning of December. And even if we just did 10 or more, so we're including everything to make sure we're including ones that consolidated. Yeah, same thing. There's 582 less of them since the start of December, 2 months ago. So it is declining, but there's still plenty of very, very large wallets out there. There's 150,750 total wallets that own 10 or more Bitcoin right now. So a lot of them are just content and waiting for the noise to end.
Yes. Or more noise will come and then say, okay, now I need to act.
Right.
Can happen
That's
too.
true. Like Mark Cuban famously says,
Yes.
I really don't pay attention to my investments until volatility occurs.
Yeah.
And that's when he starts to decide, do I want to buy? Do I want to panic sell? Whatever it
Well, let's
is.
say, yes, this, if suddenly something happens, I don't know what, but something happens and there is a distinct value in USD, in hard cash, even for some period of time. Let's say people realize, okay, we might need some cash for 1 year ahead. That also can change, okay, where do I take it? You don't sell, I think in US you don't sell your stocks because it's part of your pension fund. So typically
Right.
this is not what
401ks.
happens. Then it's only then precious metals, but now probably already taken profit and will keep taking, and only crypto left. But I don't know honestly what should be the reason why suddenly USD will become valuable, which actually makes me think there might be coming one. This is the least expected thing sometimes happens.
Yeah. It's at
We'll see.
$96.66 now, the dollar. So it's fallen quite a bit over the last year, where it was over 100. So the value of the dollar, especially under Trump, I think even in his first term, it got hit pretty hard, and crypto benefited from that.
Halving, USD dollar halving,
Yeah.
or doubling in amount, halving the value. Okay.
Yep.
Anyway, let's continue. What else you have?
Yeah, I was just going to look at the total amount of holders too, because often during retraces, when we see bottoms, you'll see that the amount of total non-empty wallets
True.
is really falling. And this led to a bottom. What happened here, where there were 152,000 wallets that fell out from a net perspective, and
Yeah,
then even here on this bottom, going into the tariff announcement, you
yeah,
see a little bit of a drop, but there's not really any significant drops yet. Maybe a little bit of a flat movement here,
true.
but it's interestingly, there's more and more wallets being created despite the fact that Bitcoin's seeing its scariest moment since the tariffs happened, really. This is a pretty sizable drop just in the past 2 weeks,
Do you
where
know
it's
what the
dropped
difference is?
15%.
Do you
Yeah.
know what the difference is?
What?
The difference is at the times you mentioned in the past, in May, November, there was a narrative, there was strong rationalization of the fear, why it's bad and why it might continue to be bad. We don't have it yet. There are some attempts to bring, I don't know, Cuba or Iran, whatever. It's not shared fear. I mean, people mention it one, and next day they mention something else. So once we have this, we might get to what you're talking about, decreasing wallets, strong belief, rationalization of the fear. I mean, when you rationalize, it means your mind walking in the cycles. Yeah.
So you
And
don't think this Greenland story is enough to really shake things up then, do you?
yeah, you never know. I
You
mean,
do? You never know?
before tariffs happened, no one, if even it was known fact that there are tariffs, but the moment I remember he came out with a stable with tariffs, say, this is real, yeah, this is not what we expected, yeah, even much worse. So whatever it is, Greenland, Iran, I don't know what. If we have such a strong narrative which implies negative future, fearful future, we might get what we are looking for as the final confirmation again. Now the bottom is in. Till we have it, we are still kind of not full set of typical metrics or environment. I would say, well, long-term bottom is in. It might happen just because of price moved too much, yeah, on the way up and on the way down. I mean, for Bitcoin and silver, it's just some bottoms formed because of this. It's enough volatility, enough pain. People reluctant to trade anymore, so price can recover. Yeah? But from terms of narratives or stories, I don't see any strong story at the moment. Do you see any strong story around?
No, not. I'm just doing a quick country breakdown. China apparently is just dominant compared to other discussions, and that could be spam related. Yeah,
Well, I get
Telegram
that
is just
Telegram.
saying, yep, it's just dwarfing China for some reason, but everything else looks pretty accurate. Big spike in Greenland when that was being discussed. Iran earlier on in the year. Israel has been pretty constant. And then Russia, we saw its peak here, actually right at the top of Bitcoin, interestingly. I don't know if that's coincidental or not, but yeah, right now, global or I guess global centric types of news stories involving other countries don't appear to be a major factor.
Yeah, maybe it will not be any country or any potential war. It could be the new Fed comes out and
Yeah.
says, you know what, guys, we indeed have problems with over speculation, even though I don't expect it, but as an example, and we need to keep our tightening cycle for some time more. Oh, that will shock the market. Say, yeah, because
This
you
is
never know.
interesting here. I see that on the alpha narratives, which was just
Yeah.
updated a few hours
Yes.
ago, the
Yeah.
biggest spike recently is trading discipline. So
What?
the
What?
crowd is in
Who
this
is-
meta
Okay.
state where they're trying to make the right moves and not be overly panicked. And I've seen this theme come up a little bit on X and Reddit, and it's made a lot of waves during this time of volatility over the last couple days. So that's the biggest story that we've seen a spike on, according to our Alpha Narratives page. We also have stuff like Bitcoin versus gold.
Yes.
We have extreme weather in the USA,
Yeah.
uh,
True.
penguin memes.
Nietzsche.
Yep,
Oh.
more on penguins. More on meme coins. Elon Musk, Tesla, SpaceX.
All right.
Earlier in the week, we saw Claudebot,
Yes.
which I saw kind of being memed for negative reasons. AI. This one down here looks like it was, yep, penguin memes again. Gaming. But this one stands out to me because I do think it's traders trying to not make any sudden moves, which actually kind of is a bummer because crypto usually rebounds best when you see panic sells or dip buys or strong reactions. But if traders are learning and becoming disciplined, this actually makes it harder for whales to capitalize off of imperfect decisions from the retail crowd. So that's kind of how I interpret it. Now, whether people are actually being disciplined or they're just following their definition of what discipline is, that's up for debate. But either way, this has been making the rounds quite a bit in just the past 24 hours. So definitely recommended. Check the alpha narratives once a week, especially on Fridays when it's updated. And you might find some pretty fascinating stuff because you compare when a specific subject is suddenly getting a spike compared to others. And there's some valuable stuff there. Trending coins, I mean, dominated by Bitcoin at the moment. You can see how much it's really ahead of everything else right now. Kind of an even level of positive versus negative sentiment. Maybe the last thing we could do, Maxim, is actually look at the positive negative ratio of a few coins here.
Indeed.
I'll zoom in just to the last month. So what do we see? A lot of negativity.
Okay, well, that's on a good side, yeah, I think. Okay.
Yeah. So it's showing, if you see the top left of my screen, 0.81. So there's basically like a 5-to-4 ratio of bearish comments outpacing bullish ones. You can see all of these little red spikes. Those are negative commentary, social volume spikes, which are exceeding positive right now. That's a good sign, right? Because we want to see the crowd starting to turn on Bitcoin, starting to predict that we're going to go to 30K, 50K, whatever. And that's the stuff that will usually turn things around, at least temporarily. So good sign for Bitcoin. I'm curious on a few other assets here. Ethereum, very similar, almost identical, in fact. Still slightly more bullish comments than bearish. 1.15 is the ratio. If we look at
historically, I think we can go all the way back. I mean, extend period so we can cover not so much, maybe 3 months. This November drop. How much was it? Yeah, close to it. Close. Okay.
A little over 3 when it was at its highest here at the top. So that these are the kind of bars you want to avoid. Yeah.
I'm comparing the bottoms here. Kind of almost there.
Yeah, I mean, today is the lowest it's been since the end of November when that was a bottom. So that's worth noting.
Okay.
XRP, for those interested, pretty negative. Yeah, they're all looking pretty similar. This was the most negative day. XRP's up a little more today. Solana, also very negative. So we're seeing a theme here. People are definitely expressing FUD according to social media commentary. Tron, quite low. Doge, somewhat low. It's rebounded a bit. Cardano, quite low. I don't see any that are, mid-range or high. That's for sure. Everything is kind of slightly more bearish than usual to severely more bearish than usual. Here's a good one, Hype, which is the only, one of the only solid performing assets over the past week. Yeah. And it's a little more in the middle at least. But yeah, I think from a
Is it me or is it Brian? Internet dropped. We lost Brian. Anyway, to sum up, I don't know when Brian will be able to join us back. In the major coins, based on sentiment metric alone, yeah, look close to at least temporary bottom. On a mid to long-term bottom, we're still missing signs of long-term hodlers being forced to become active again, and small hodlers to stop moving the essence to Bitcoin. That's the summary. Yeah, and we might get here on next week. Brian isn't here, but I will tell him I will be flying, so he will have to keep stream alone with you, Max. We'll see if this mentioned two metrics which don't show exactly strong bottomish signs, and there's actually a third one. So these two metrics is amount of wallets and holding of smaller category of holders, and net realized profit loss together with age consumed showing like too little movements. The third one I was checking, we didn't come to it today. On-chain liquidations, they're not even close, not even half to what we typically observe at the bottoms. Yeah. That would be, for me personally, necessary to make a strong change toward bullish stance. Yeah. Next Friday we will see. Max, I think we can close. Something happened with Brian's internet. Maybe this weather conditions in Wisconsin, or if I'm not mistaken where he is now, indeed hit his internet. Thanks everyone. Stay safe. Trading discipline. Yeah. Act only when you're sure we've done research, confidence enough that position is strong, and don't feel urged. Timing is very difficult. Yeah? Okay, guys. Bye-bye.